Hey guys, welcome to this video. In this one, I'm going to run over the AUD against the US dollar. If you saw my stream today, it covered a lot. If you haven't got my free training as well, don't forget to grab it underneath this video. So let's go for it then, shall we? The Australian dollar against the US dollar, if you just start off on the monthly, you can see this really ugly downwards movement for a sustained period of time. And this has gone on and on and on as the AUD has lost value off the back of this big fall we had around COVID time. Had a really, really big fall there. Okay, dollar strength as people flock to it. You get the big rebound off from here. Okay, so there's your retracement. Price came almost as far as a full retracement of 100% and then started its descent all the way back down. And every single bump you've had in the road has resulted in a cording rejection. Okay, and you can see a very nice trajectory of the market like this. I've gone over this a lot lately, but really this is how a downtrend sustains itself, because the price pops up and then it hits levels of rejection and continues down. And the more that continues, the further the downtrend, of course, goes. And then where we are after this is what everyone's left to figure out. So there's a way of doing that by using what you've seen and what you know to make a calculated decision. That's what trading is all about, making an educated and calculated decision on the next outcome or the thing that's going to happen. Now, because the Australian dollar against the US dollar has melted away for an extreme amount of time, it's even more visible on the weekly. You can see a really nice steep downtrend. Moving averages coinciding with it. Every push up, even to your key moving averages, okay, is showing a big push down, and the trend line has sustained itself. Okay, so we know it's in harsh downtrend, this particular FX pair. Now, of course, within downtrends, you can trade them short, as I've just labeled, but you can also trade them to the long side. And you've got many, many, many opportunities to do that. It also helps greatly with hedging as well. Now, because you've seen a sustained move to the downside for many weeks, okay, lots and lots of red, 1, 2, 3, 4, 5, 6, and then you've got all this sideways movement, which didn't really take you much higher, and then about 3 more candles and you're straight back down. So a big, big slew of red, and if you put it on the monthly, you're probably just going to see red candles. Now, it's not the furthest you've gone without a retracement. You can see this point up here where I'm just going to label at 0.7135, had a push up, followed by a push all the way to 0.61. You've gone from 6.8 to 6.3. So obviously not as far in terms of percent, if you like, or pips even, but still a significant down move. But I don't think we're quite done yet. And I said that around here. You'll probably remember if you follow me. I said around this point, I don't think we're quite done, because these candle wicks that formed showed you that the market is saying, no, no, thank you. And it actually didn't even make it to your key 20 and 40 MAs, which really says something. Because if you can't make it to a 20 MA and you're still pushing down, there is real weakness for this particular asset. Now, if you go on your monthly, you can see you've actually come, down since 2011 consistently, a lot like your dollar against your Swiss franc. Okay, so I don't expect that to change too much, really. I think you'll probably dip slightly lower. I don't think this is finished. And I think really using this area here is going to be a good place to get a long entry in. And I'll tell you why. You'll have lots of professionals, okay, like myself, and people who are the larger money players in the market, institutions, etc., who know, okay, the price is oversold, it's really cheap at the moment. Okay, we came from here and it rebounded significantly. I mean, you've already seen it once, so you have to judge to yourself, okay, well, if I've just seen this happen, what does it mean? Okay, all of this evidence gathering and understanding, well, I've seen something before, so what's going to happen in the future is so beneficial, because it gives you the opportunity to be slightly further ahead and it stops you guessing what's going to occur. Okay, you've got people who make money trading consistently and you've got people who guess how to do that for a significant period of time, ultimately losing their money. And this area is the most informed decision you could possibly take based on technicals at this point. You came up really far from it there, you've done it there, so only really you can surmise that perhaps it will happen again. Okay, it's the only real probable place you can get long. So I wouldn't be really convinced of this pushing up just yet. And with that as well, you do have very early minor resistance. It was support, covered that a lot today, but it's now resistance. So that is likely to cause an issue as well. So if we start to curve down, it wouldn't shock me. If you do ultimately go even lower, you could save some DCA entries back for here. It wouldn't shock me either. Don't be fooled by this stochastic oscillator. Don't be fooled by the fact it's low at the moment and it's oversold. And don't think, okay, well, it's oversold, so there's no way it could get here, let alone there. Because many times, like you would have found, on other falls, like you had here, okay, and so on, or most notably there, I would say, you just kept going, right? And there's nothing to stop that happening. So don't think it's oversold and can't go any lower, because it can, and many times it actually will. Okay, it might look something like this, okay, before it goes up and comes back to that level of key resistance, which was former key support. So I expect in the long term, really, this long-term downtrend to continue. I can't see much weight in it. And you can see as well, I mean, backing up what I just said again, is the fact that if you look here, you had to come all the way to 0.55 before you saw a real move up. Okay, so anything that gets nearer that level is clearly a more preferred price by traders. You can see that, and you can also see it where I've labeled there, price rejected there, and there. Okay, you've got various levels of rejection at this price. So that's really forming a rock bottom, or a rock for where traders, particularly institutional ones, or people changing over their Australian dollars, or their dollars into Australian dollars, would like to do that, because they're going to get, the ultimate price. They'll change the currency and they'll do it at a good time, or they're an institution buying at the lowest price, which they can see is feasible for those currencies. So I hope that full breakdown helps. As I said, I expect the price just to drip and drip and drip. And if not, I'll short higher up. Otherwise, I'm accumulating DCA longs as my bias. Thanks for watching, guys. Hope that helps. Get my free training underneath. Don't forget to like, share, and comment, and subscribe. I'll see you in the next one.